Greetings everyone, JJ here from SchoolofTrade.com with your Tournament quiz of the day. Now guys, if you haven't done this yet, you're in the right spot. Here's how it all works. There's going to be a quiz at the end of this video, real simple quiz. Okay, you won't need too much studying time. All you have to do to answer the quiz, guys, is click the link in the description of the video, and the first 5 correct answers are going to qualify for things like the beginner's courses, up to 20% off the advanced course. That's an $800 value, guys. And the rules are also posted in the description. If you're watching this video right now on anything else besides our YouTube page, just double click on the video. That will take you right to the YouTube page where you can rate it 5 stars, you can place comments, and you can follow the link in the description. Again, guys, the first 5 correct answers are going to qualify for everything up to 20% off the advanced course, an $800 value. Now today's term of the day is average true range, or ATR. We discussed this in our members training today, but we didn't have much time to go over it in our trade room with our trial guests. Average true range, what is it? The ATR. Well, it measures price movement or price volatility. Now true range, right, or known as TR, is a very old indicator, and it's the greatest of the following, right? The current high less the current low, the absolute value of the current high less the previous close, or the absolute value of the current low less the previous close, right? So you're probably thinking to yourself, what? I've never heard of that. That doesn't make any sense. And that's exactly why we don't use the true range, right? We take an average of that true range, right? Generally a 14-period moving average to give you the average true range, right? So the true range, an average of it, is the average true range, right? The ATR. Now, rather than worrying about, right, what is a current high less the current low? What's an absolute value of the current low, right? Without worrying about all the nitty-gritty details here. Okay, how do we use it? Well, we use it. It's a very simple technical indicator, and I use it on a fast time frame. I like to use time-based charts because they allow us to have the range on a time variable, right? So as the time progresses, the range increases, the range decreases, right? It's going to help get you aware of, as the morning progresses, is the range getting tighter, narrower, or wider? Okay, and the range is going to read as a high or a low reading. So if you have a high reading on the average true range, that means there's plenty of trading range, right? Take the trade. There's lots of room for the trade to run. If you see a low reading on the ATR, that means you're looking at a very tight or a narrow trading range, and so it's a sideways market most likely. There's very little for the room for the trade to run, and so you probably want to avoid the trade. Okay, now when do we use it? Well, we use ATR, average true range, before we execute the trade to identify a market that we may want to avoid, right? If we see the average true range is 1, and I want the range to be 10, right, then I'm going to skip that trade. That means the average range in the market is only 1 point, right, per 2 minutes. Okay, if you use it on a 10-minute chart, it'd be 1 point per 10 minutes. Okay, so we want that range to be as wide as possible because obviously a 10-point range is going to make us 10 points of profit. A 1-point range will only make us 1 point of profit. Do you want to make 10 points or make 1 point? I think we know the answer to that question. Okay, so we use it ahead of time to qualify a trade, right? It helps to identify a slow or choppy market. It helps to identify a market that has a lot of range that we want to be participating with, right? The more range in the market, the more the trade will run, giving us more profit potential. Okay, a 4 ATR is an average of 4 ticks of range for every X amount of periods. So if you throw an ATR indicator on a 2-minute chart, if you have a 4 ATR on a 2-minute chart, that's going to be 4 ticks of range for every 2 minutes. Make sense? All right, guys. Quiz time. Quiz time. Put your pencils and papers aside. Eyes on your own screen. All right, guys. This moving average identifies volatility or the trading range of the market. Again, this is a moving average that identifies the volatility or the trading range of the market. Is it an exponential moving average or an EMA? Is it the average true range, the ATR, or is it the tick and the trend? Right? This moving average identifies volatility or the trading range of the market. Is it an exponential moving average, an EMA? Is it an average true range indicator, ATR, or is it your tick and your trend? Do you know the answer? If you know the answer, guys, just simply click on that link that says I know the answer, and we'll take you right to our blog. The first 5 correct answers every day will qualify for a free beginner's course, up to 20% off the advanced course. And guys, as always, if you want any help with the rules or how to get involved with the raffle, we do the raffle every month at the middle of the month. So make sure you guys come back and keep an eye on that. We'll see you guys back here next time If you want more information, sales@schooloftrade.com. Hope the quiz helped. We learned some more about ATR today, and we'll see you guys in the room tomorrow morning. Bye-bye for now.